A very good afternoon and welcome to this edition of Finweek Money Matters, the show that helps you manage your finances. I'm Bronwyn Nielsen. My co-hosts today are Mark Ashton and Thandisizwe Malishana. He's a Finweek editor and deputy editor respectively. We kick off with our lunchtime conversation and with a look at Finweek's cover story, Boer Billionaires, the Afrikaners individuals who have found vast wealth, and we mean vast wealth, in the post-apartheid years. In Collective Insight, we discuss the relationship between risk and reward. Plus, we look at talent recruitment in our entrepreneurship segment. Let's start off with a look at our cover story. So ironically, the end of apartheid and the transition to democracy has done more for the economic empowerment of Afrikaners than the Broederbond ever did. In Finweek's cover story this week, Bruce Whitfield looks at the Afrikaners individuals who have found immense wealth in the post-apartheid years. Joining us in studio now, we have JP Landman, political analyst and consultant to Nedbank Private Wealth, Christo Owen van der Rede, CEO at AHI, and of course Thandisizwe and Mark at my side. Very interesting story. How much has this got to do, first of all, with Stellenbosch? Let's just put it on the table because I'm thinking of getting a spot down there, if this is anything to go by.
Yeah, I mean, look, I think it's fascinating because I think what you've done is you've actually discovered it talks a lot to the professional network. Very, very simplistically, a lot of these guys have enjoyed symbiotic business relationships. I mean, there have been times when there have been fallout. You know, there have been high-profile fallouts, for instance, the Rupert and Korsbecker circumstances. But they have always enjoyed this network that for over the last 20 years has developed and been able to exchange ideas and have these pockets of wealth that have been able to deploy at opportunities when they did present themselves. And I think you've been able to see what's very fascinating about this is that a lot of this wealth has been created in a single generation between 1994 and 2013, and I mean, this is serious wealth. This isn't just it's not just a little bit of wealth. It is serious wealth creation in a very short period of time.
JP, you know, regularly on the show, I flippantly refer to the Stellenbosch mafia. But how much is there to this network that Mark has just alluded to, and working with one another to leverage one another's better elements?
Look, all the research we have tell us that social capital, or the networks between people, are extremely important in being successful professionally. Whether you're in Stellenbosch or in the Free State or in other parts of the country, if you don't have social capital, you have very little. And social capital is simply the relationships, the trust, people talking to one another. I think, and this applies throughout South Africa, when you're plugged in, you've got a better chance of doing better than people who are not plugged in.
I mean, Chris, maybe that's something I'd like to throw to you. I think as we look at the Afrikaans business community, they do seem to be able to coordinate a lot of their activities very, very well. And we look at a lot of the startup communities in South Africa, which caters to a broader demographic, and they seem to do a lot of little things but not coordinate their efforts. What is it about the Afrikaans community that seem to have been able to coordinate their business efforts and build on the social capital?
I joined the AHI last year. Mm-hmm. AHI has been in operation for 70 years. Amazing, amazing history. Today we see the result of 70 years of networking. These guys have learned that there's only one way to create wealth, and that's through economic organization. So every town has a business chamber. That business chamber creates opportunities for the local business people to leverage from each other, but also there's a different type of element that is also very important, and that's their ability to do things for their community and do things on their own. So that spirit of volunteerism is amazing within that community, and something that other communities can learn of.
Well, the Jewish community also gets it right.
Yeah,
sure. I mean, I think there are pockets. You can look at a lot of we've done it on the foreigners that have come into South Africa, and a lot of them, when they do coordinate their efforts, they've been very successful. Whether you're Somalian, Greek, Portuguese, there is this idea of working together as a community and being able to grow their business interests. And I think there's definitely a lesson to be learned there.
JP, Thandisizwe, I'm coming to you in a moment. If you can just add your thoughts on how the Jewish community has managed to leverage their network to the same extent as the Afrikaans community.
And even more so. I have a very, very high regard for what the Jewish community has done in South Africa. They've always been part of South Africa. They've always been part of the bigger community, but they have also at the same time always been a very identifiable group of their own. They've got that mix between on your own and being engaged or involved. I think they got that mix very, very, very right. Very remarkable example.
kind of sees where I was. Let's drill down
I
into this
wanted-
article before. I would like a question to you, and that is that Johan Rupert leads the pile here by some way at 60 billion rand in terms of estimated wealth. Way above, I think the next up is Christo Wiese at about 40 billion. Remarkable. I mean, you tell me what struck you about the article.
I think absolutely. I think, you know, what Mark spoke about in terms of you know, wealth that's been created over one generation. If you look at Johan Rupert, obviously it's years and multi-generations of wealth creation, which makes me think that when we look at this group now, there's a major chance that over the next 10, 20 years we'll see another emerging group, you know, bring their children and grandchildren. So we talk about this network being, you know, getting closed more and more to the people that are only exposed to it now. But again, you know, that for me, you know, that closed a setup is not necessarily only to these types of guys, you know, the white Afrikaners or the Jewish. I think you find it amongst black businessmen as well. And flippantly, I'll say it, you know, they are mostly within the government spheres of you know, creating wealth. And to them, that also is some sort of a club that is only close to them, because, you know, there's always a saying that says you have to know someone to get in there. And if you don't, chances are you won't.
And JP, I mean, I think something that I find quite interesting, you know, South Africa is quite polarized. You'll often talk to a white male in South Africa and they'll say there's no opportunities. You talk to a black South African and they will come, and it's a very general statement, but they will say that there hasn't been a lot of economic transformation. What do you believe is the state? Do you believe we have made genuine progress in terms of economic transformation in South Africa, and do you believe it's going to accelerate over the next decade?
The answer is yes, I think we have. And you've got objective data from, for example, the census that tells you what has changed in 10 years, between 2001 and 2011. People who say that nothing has changed, well, I mean, it is simply not correct. No. An enormous amount has changed. Has things changed as much as people would have hoped or expected? No. So you will always, for some people it was always going to be too quick, and for others it was always going to be too slow. I think that's the reality of South Africa. But both those extremes also confirm that there has been change and progress.
Would the opening up of these, I'll call them clubs, would the opening up of these create a more faster and more broader sense of economic transformation?
Probably, I must think about that. I'm not sure how, you know, what we refer to here as a Stellenbosch club is not really that in real terms. We know of huge fights between members of those clubs. Sure. I doubt whether they spend Christmas evening together, you know, or any other evening for that matter. So one mustn't go too far with the idea of a club. That is sometimes a fictitious thing. But I think what is important is you want to open up networks. And you want networks to become South African and not just one group. Whether you call that South African being multiracial or multi-language, whatever, you do want an opening up of networks. My sense is it is happening a lot. You know, when I travel through the country and you talk to different audiences and you go to different, even small towns, you do find that the networks are beginning to merge and open up. I think it's a process, but it's happening.
I want to come back to the fact that Christo Wiese created all this wealth in one lifetime, 40 billion. He's definitely got a formula that needs to be replicated. A couple of other players, like, is it Michel Leroux?
Yeah,
Michel Leroux, founder of Capitec. I mean, he's at 3 billion. But again, this is one lifetime. And of course, Laurie Dippenaar and GT Ferreira also at 5 billion and 6.5 billion respectively.
I think what's interesting about a lot of these guys is they made their money out of financial services or retail. And I think that, you know, the Capitec story has been well documented. PSG, Yanni Mouton, is essentially a financial services and investment company with Capitec as a spin-off. The Three Musketeers, as they're known at First Rand, they were prepared to take a chance. I mean, it wasn't a stellar Big Four bank, the stellar Big Four bank that it is now, but the First Rand Group, they saw an opportunity, and what it speaks to is how South Africa has advanced in terms of our financial services. We have become an economic trading hub, whether it's in domestic capital or foreign capital, and these are the guys that have managed to create a property around which to build their wealth.
How's Michael kept such a low profile?
Look, I think it's interesting. I mean, I think it is. I think the thing with Capitec was that it had quite a long run up, and I mean, maybe JP's got some insights here, but I think that Capitec has always been. They've tried to keep a very humble and simple reputation around the business that they've built, but I don't think that they've I don't think we don't have such a if you look at most of the gentlemen, there isn't this consumption, this conspicuous capitalism that we talk to.
Is it intentional, sort of the low profile that we're seeing prevalent to most of these gentlemen, actually?
I don't know. I think it probably goes with the individual personality. I mean, Whitfield, whom you've referred to, is a very humble and modest person, extremely brilliant and competent, but very humble. So it's in a sense natural that his profile would be low, and I would think that would go for all of them.
I think the important thing is that they've identified niche markets. Christo Wiese has started his retail business not in the town competing with the Ackermans and those guys. He started the business in rural towns, selling cheap clothing. The same with all of the other chaps. I think the most important thing is that when I go to towns and colored or black guys confront me and say, but why are these guys so rich and why do they still have all the opportunities? I tell them, but why do the Somalis and Pakistanis, why do they see the opportunities in these rural towns? And they grab it and they make the most of it. So Africa is abound with opportunities. It all depends on you and what you make of it, but also working together as a group to create wealth for yourself.
You touched on something earlier about the chambers of commerce, and I find this fascinating because I think the chambers of commerce have become very much, they have a very old feel to them. They feel like they used to be a network of businesses, and they've lost a lot of the impetus and a lot of the role that they play. Even Joburg Chamber of Commerce in the industry, I think you really only see them when we start talking. Business kind of looks around and says, okay, now I need somebody to champion us when we're having strikes and high profile issues like that. But they don't seem to be particularly engaged with their chambers of commerce. Is that a too general a statement, or do you believe that they need to redefine their role?
You see, the chamber environment in South Africa is very fragmented. You've got a number of chambers, a couple of black chambers, then you've got Afrikaners and an English chamber. It depends on the chamber. What we are saying to our chambers is that they need to become the economic hub of the town. They need to know how many businesses have opened up, what are the opportunities for businesses, etc. We've also started now introducing an entrepreneurial course within those chambers so that we sort of, the demographic profile of the chamber becomes much more inclusive and working across the boundaries. But chambers need to sort of adapt, otherwise they're going to die out.
I just wanted to touch on, you mentioned financial services, retail, the underpin to the majority of these billionaires. Koos Becker, in a stable of his own, at 10 billion at estimated wealth and rising, effectively. We're looking at what's happening to Naspers' share price. Where do you think the billionaires of the future are going to come from? What industry?
I think Christo has put his finger on it, and that is the successful people are the ones who identify niches. And what are the niches of the future going to be? I, for one, simply don't know, and I think nobody knows. That is. I
suppose if we knew, we wouldn't be here at this table. We'd be forging our own billion rand businesses.
That's right. I mean, that's the role of an entrepreneur, is to go and find these niches. And I think sometimes there are South Africans who make the mistake to think when you are, all that you need is to be plugged in, all that you need is to be part of a network. Now, those things are important, as we've discussed just now. But I think the critical element is the one that Christo said, which is you have to find a niche which is unique and profitable, and then build that out. And I think all these people, if you look at them, in one way or another did that. Can I just say something about the growth of financial services? I think that's quite a testimony to the South African economy, that in a fairly short space of time, we've seen an explosion of financial services. I mean, some of those gentlemen symbolize that, but of course it's much more than that. And I think that tells you that why do people need financial services? Well, they need it because they have some money, at least. They need it because they want to do some financial planning. Now, a person who earns 100 rand a year is not really going to spend time doing financial planning. It's only when you earn considerably more than that. And I think if you consider that, it's a testimony to what the South African economy has done in the last 20 years or so, since it has been liberated.
You want to add to that, Christo?
No, I agree. It's about niche markets. You see, sometimes we try to simplify these sort of trends to say, but it's a club, or it's because of this and that and the other. We are part of a global economy. And you need to find the niches, and you need to make the most of it, and you have to take risk. Without taking risk, and without that broader network, being part of that broader network, you won't be able to make a success.
No, absolutely agree. I just want to ask a question, but before I do that, I think I like the Christo Wiese story as well as Koos Becker, because those are the two guys that continue to look for these opportunities, continue to look for these niche markets. They're not just sitting there and saying, actually, I've made it. You know, it's a continuous process to them. And I suppose, you know, it's a case of the sky's the limit. But I also wanted to touch on what you touched on earlier in terms of these guys, you know, giving back to the community and having that sense of volunteerism and stuff like that. What are some of the things that you can sort of touch on and pinpoint and say, actually, you know, these are the things that they've done that are making a difference in the communities in which, you know, either they're from or some of their businesses operate in?
We've got about 105 chambers all over South Africa. In other words, 105 small Stellenbosches. And it's amazing to see how these guys operate. First thing, they apply leadership. And it's not just about leadership about themselves, inward type of leadership, it's about the town. They are prepared to engage with the municipality, which is supposed to create this hive to attract the bees to come and make the honey. They are prepared to take the whole town with them. And it's the most amazing things which I see when I go to these towns, how these guys operate. And they've long past the racial divides of the past. Sometimes we, at the higher level, sort of try to cling to it. But these guys understand the environment. They know if they're not going to take the lead within that environment, then their children and their children's children will eventually suffer. So they need to create a better place, not just for themselves, but for the entire town.
Mark, you had one more question.
Yeah, I mean, the question about risk-taking, I mean, do you think, and maybe to Christo initially, is do you think South Africa's become better at taking risks? I mean, we always criticise our entrepreneurial culture in South Africa, but this clearly shows that there are people out there that do take risks. Do you believe that we've become better at taking risk over the last 17, 18 years, or do you think we still got a lot of work to do there?
I think it has a lot to do with your level of education. There's a direct correlation between the level of education, the level of understanding of economic principles, and taking risk. If you do not have that type of background, forget about it. And we need to do much more at school level to create that cult of entrepreneurship, so to speak, and to teach kids to take risk. Our education system doesn't lend itself for kids to take risk. So even at the risk to fail.
No, I fully agree with that. Look, why these and many other people, the focus is on them. But many people have been very, very successful since 1994. And part of the reason is things have opened up, but they were also, at the point of opening up, they were very well positioned. What positioned them well? They were the haves. They had education, they had skills, they may have had access to capital, they may have had their own capital or family capital and so on. Once you're part of the haves, it is just so much easier to move forward. In that context, Mark, yes, I think we have seen an explosion of entrepreneurial activity in pockets in our society. Of course, one wants to see that throughout society, but I think Christo is right. It's going to take time, and education is going to be a critical component on that, no question.
Thanks so much for your time. JP, I see your book, The Long View, getting rave reviews. It's on my bedside table, and it's my next foray into reading. So I look forward to it. Thank you so much for your time. JP Landman, political analyst and consultant to Nedbank Private Wealth, and Christo Owen van der Reede from AHI. Remember that Finweek is available on the shelves today in both English and Afrikaans, and also is available digitally at mysubs.co.za. Time now for a quick look at our Finweek trade of the week. So Mark, where are we going to make our money?
We think we're going to make some money on Afrocentric. Now, Afrocentric is quite interesting because you're talking about the Jewish community. It's got Brian Joffe as one of its board of directors. Mayor Khan sits on the board. It's a high-profile board of directors, and there's been a lot of interest in it because it's got an empowerment element to it as well. It's well positioned in terms of healthcare in South Africa. I've been talking about it for a couple of months now, and every time I talk about it, it goes down. So,
well, let's hope the trend is now going to turn in your favour. Otherwise, you're going to lose credibility.
At some point, I hope I get it right. Look, the share price actually sold off quite a lot this week with regards to...
Sold off a lot. Look at it. It looks as though that line there looks very dramatic.
It's been a bad week.
A very, very bad week.
But it has exposure to technology group Jasco, which put out some very poor results this week and had to write down that asset. They own about 26% of it. But at the end of the day, you're buying a business with fantastic empowerment credentials, trades on a price to earnings multiple of 7. It's got good cash flows.
It's got Brian Joffe,
good assets,
as you said. Great
board of directors. I think this is something that in the long run will pay off. I think it's just hopefully.
Will it pay off, or will it be the next 10-bagger?
We hope it's a 10-bagger. I think we're looking for a 10-bagger there.
Do you think they should hold on to Jasco?
Look, I think it's difficult now. I think they've written down a lot of the asset there. I think that it's now, there's a bad transaction that's just really gone pear-shaped, and hopefully the remaining assets ultimately kick in and go from there.
Great. Well, there you go. For all those value investors out there, because of Jasco and the sell-off in Afrocentric, perhaps take a little risk on board. Of course, we're chatting about that later in the show. We're going to a short ad break now. More Finweek Money Matters right after this. Welcome back to Finweek Money Matters. In the latest edition of Collective Insights for the year, we look at the relationship between risk and reward and unpack risk in 4 different ways. Firstly, we look at what risk is, then we look at why it matters and what you need to do about it. And lastly, we explore a few ways in which risk is being modelled in a more informed way. Joining us for the conversation, Anne Cabot Alitzhauser, head of the Alexander Forbes Research Institute, and Roland Rousseau from the Barclays Africa Group. Thanks so much for joining us. And perhaps we just start with you, the theme, or the themes unfolding in the Collective Insights. How many of these have you done, Mark?
There's a quarterly edition this year because it's a anniversary edition, but we'll get onto that at the end of it. I think maybe if we throw it to Anne, maybe just to unpack some of the themes from this week's edition.
Well, it's risk, and yet I think what comes out at you in the diverse articles is how many different ways there are to think about risk, and risk in the eyes of whom? The investor, in the eyes of the asset manager, in the eyes of the insurer. And because it's such a complex thing to unpack, I think that many people don't really know how to get their mind around it. So when people are asked about what is your risk vis-a-vis investing, they don't even really know how to even start approaching the problem. And that's what I think that this particular issue is trying to address, all the different permutations of risk, and how do you approach them? What do you do about it?
Do you think we forget about risk when the market is simply flying at the moment? I mean, at the moment you get 15-20% in a year. Does anybody care what risk is? And maybe this is a question for Roland as well. Like, the simplicity. I'm a retail investor. I don't really worry about. I look at my statement and it says I do 20% in a year. I feel clever. But broader as an industry, do you think that the professional money managers have a good appreciation of risk, or do they get caught up in exactly the same trap of looking at a great return and they forget about risk in the process?
Well, the irony is that the risk is actually the responsibility of the end investor, not the fund manager. Although they pay to look after it, the risk is still taken by the end investor. So there's this old adage that in the markets we blame the markets when we lose money, but we take credit when we make money, right? So there's that skewed perception of what actually drives our portfolio. And the scientific research shows unequivocally that 80 to 90% of what happens in your portfolio is not due to the manager you've hired, it's due to the environment and the risks out there. So we focus very much on return, and that's what you see in your statement. But what we don't understand is how did you get to that return? So we choose managers at the top of the performance rankings, but often those are the managers that just took the most risk. And you find also the fund managers who take the most risk at the bottom of the performance rankings, they just got unlucky. So the best manager is somewhere in between.
Is it a uniquely South African problem in that we see a lot of, we have a very concentrated market. I mean, essentially you have everybody buying the top 40 or top 80 shares, and maybe you've got a small cap portfolio, etc. There's a little bit of diversity. But is it something that's unique to South Africa, or is it a situation that you see playing out across the globe?
Well, I think Anne would agree with me that it's a global phenomenon. As we don't benchmark skill correctly, we just look at the return. What we should be looking at is how much risk is taken relative to, how much return is generated relative to the risks that are taken. So if somebody's taking more risk, then they have to generate more return over and above that if they've determined to have skill. I don't know what your view is, Anne.
Well, you make a common mistake of a lot of people when they think about investing. Sorry, Mark. And that is to think of investing as simply a tool to just give me highest return. But actually it's an incredibly flexible, what would you call a skill set that you can use investing to achieve any number of different outcomes. So one of the outcomes I might want to do is to replace my income stream when I retire because I won't be paid by an employer anymore. Now the interesting thing about trying to achieve that objective, and it's one of the comments in the article that Dan Akers writes here, is if I'm heading towards that objective, my income maximization on retirement, it's a very different objective than just give me the highest possible return that you possibly can. Because what I don't want it to do is to fluctuate away from that cost of annuitization when I retire, that I have to, that purchase point of the annuity. If it fluctuates away from there, then my buying power gets severely impacted. Now, unless you understand that as being the risk, you fall into the trap that you just go and follow any investment strategy that they say, oh, this is a risky one, this one isn't a risky one. So risk is in the eye of the beholder to the extent of where do they want to go and how prepared are they to deviate from that end point in the path there.
But don't we reward that when we say, well, here, you know, you did a simple unit trust fact sheet and it's going to show you benchmark, and anybody's going to pick whatever their benchmark that they can beat, and then they're going to say, look, we outperformed it, and then that will be how the product is then sold to the end investor.
That is exactly the problem, is that the benchmark is not a risk-adjusted benchmark. The benchmark that is put into a fact sheet is a generally accepted benchmark for that category of funds.
True.
The true definition of skill is not did you outperform the benchmark, it's did you outperform the risks you've taken, because I can outperform any benchmark by taking on additional risk, but that shouldn't be deemed